This is the Trading Psychology Podcast. This is VP, creator of NoNonsenseForex.com and author of the book No Nonsense Forex Trading Psychology. And with me, as always, is Rob Reinhold.
Hello, everybody. This is Rob. Nice to see you here again. In case you don't know about me, I've been trading for over 25 years, and I trade all the markets.
And Rob, we had a promo a couple weeks back regarding Maverick currencies. We have a different promotion this time around. Why don't you tell us about that and how this one's different?
In the last episode, we talked about trading multiple asset classes and how that's just a natural evolution for traders. Now, a lot of your traders, they're really focused on Forex and crypto. We love that. Our whole division, Maverick Currencies, is Forex and crypto. Our other division, Maverick Trading, that's been around for over 25 years, we focus more on equities and options. And I say equities is a way to hedge out our options trade. So it's almost 100% options trading. For anyone who's interested in becoming an options trader for Maverick Trading, jump over to maverickTrading.com/NNFX for No Nonsense Forex, and you can get a 1-week free membership. And it will allow you to go in and check out what we do for courses, check out our tests that we require our traders to take, really just to test out and see if this is something you want to do.
And so, yes, you can become a professional prop trader many times over with the same great company. Now, moving on to episode 11, we're talking about confirmation and recency bias. These are two different things, and they are easily confused, I must admit. I cross these things up a lot. Not like it really mattered, but we should probably define them now. This is going to be a mostly Rob-heavy episode because he really does focus a lot on confirmation bias and what it can do to traders, to where I'm kind of more in the recency bias camp, which we have already glossed over a few times on this show. So Rob, why don't you get us started, talk about kind of the difference between the two and, kind of lead us into this episode.
Let's just start off with a bias. A bias is a pre-held belief that gets in the way from you analyzing the data in a clear-headed way. Back when I was a kid, I had a teacher talk about how we all have this invisible plane of glass in front of our eyes. And every time something happens in our life, we write something on it. And so the next time we look through that glass, we've written something on it and we're going to treat it differently. That's basically all the biases that you could possibly talk about. Is from there's something basically written on that piece of glass that is going to cause you to look at data differently. In the past, you might have looked at data much more honestly, and now you've written a couple things to where you now no longer honestly look at the data. That is a problem as a trader. We need to be very data-driven.
And I think you're right, because there's that old saying, what doesn't kill you defines you. And so all of these little data points that you get on any given day, however you interpret them or however you have grown to interpret them, does shape you. I mean, everybody who listens to this, or most of you probably know, I have an investment podcast, and I'm extremely biased on pretty much everything. But as a result, that gives me conviction in my investing. At the same time, I could be wrong. And so I have to keep reminding myself of that and take actions accordingly, and really, really stress the fact that I do this, because I know that most people don't do that. They all have biases, and it drives everything they do, including things when it comes to their money, which can be very, very dangerous.
The person that says they have no bias probably has the biggest bias of them all. What do you think about that?
Amen. Yeah. Not to get into too sensitive topics, but the people who act like they're completely neutral in everything are usually the worst offenders deep down inside.
We just all need to admit that we have them. It's fine. And we're going to get into some really deep stuff, and we are going to get into some pretty sensitive topics, and we're going to have to kind of dance around. But look, we all have them. The best thing to be is aware of them. As long as you're aware of them, then all of a sudden you have a choice. And it goes back to our whole episode we did on behavior change. Pre-contemplative means that you have no idea what you're doing. You're just a robot shooting out answers. You're not even seeing that you have writings all over that glass in front of your face. Once you can see them, then you finally have a chance to change that. So the first one we wanted to talk about and cover is recency bias. What does recency bias mean to you?
It's easier to give examples, I think, than it would be to define this, but it's letting the things that just happened in the past influence your decision now. And we touched on this quite a bit when we talked about losing streaks and slumps. I think what we're about to talk about here is a nuance that doesn't really fall into that category specifically.
That's a great definition. Let's just share a couple of examples of what recency bias is, because as you said, I agree. It's easier to show examples of it than to explain what it is.
Yeah, and I think the best examples, because if you have been trading for any amount of time, you have experienced this one for sure. It would be, and this is an emotional thing, and it shouldn't be, but it is, and it's happened to all of us. It probably still happens to a lot of you, is falling in love and or hating certain currency pairs in Forex, for example. For clarity, I have put out a couple of videos on my channel saying, hey, these are my favorite pairs as a trend trader. And this is why, because at their core, they have this ability to want to trend more and without a lot of nonsense bringing them down. Now, these videos were made like 4 years ago, 5 years ago even. And people ask me now, like, hey, are these still your favorite pairs? I'm like, well, yeah, at their core, they are. They may not have performed as well as they have before, but I try not to look at that because I used to always look at that. So I'll give a couple examples here. Way back in the day, before I'd really figured out, kind of found my way, I was trading pound CAD on the 30-minute chart. I was searching for that magical combination of, my indicators and time frame and pair and everything like that. And I really felt like I had found it. I kept winning, and if I lost, it would be a small loss. Even if I would make a mistake, like a bad mistake, whether it was position sizing or time, or I would go early because I was getting antsy, whatever the case was, I would still win on the pound CAD 30-minute chart. And I used to say this thing, there's a line from The Wire that says, even if I miss, I can't miss. And so I just felt on top of the world. I'm like, man, if I just keep sticking to this one pair on this one time frame with this one little hastily thrown together algorithm, there's no stopping me.
Ah, the holy grail of trading. I've found that many times.
Yeah. If somebody would have said that to me, I'm like, yeah, oh, actually, okay, that does sound really stupid. But there's nobody around to say that to me. So I thought I had found the right combination to open this lock and find the Holy Grail. I must have done that for, no kidding, Rob, probably about 6 weeks straight with nothing but success and just a few losing days that weren't even that bad. And then crash. And then I lost it all in a matter of probably 4 days. Because I was saying, okay, if I'm doing this well, I'm leaving money on the table by not risking more. And so I allowed myself to do that. And as is always the case, fate has this funny way of punching you in the face just at the perfect time. Right when I started doing that, here comes all the losses. But, everybody does have their favorite pairs out there because they remember, how well those pairs have treated them in the past. But that doesn't make them a whole lot better or worse than other pairs. Now, on the other side of that, and I think this actually happens more, we have certain pairs that we hate. There's pairs out there that they refuse to trade just because of how poorly these pairs treated them in the past. And sometimes, for example, if you're a trend trader, just how long certain pairs have given you absolutely nothing to work with. But my response to this, yes, it might be this way now, but it won't always. So I can talk to you about this, Rob, because you know this very, very well. Take the dollar yen. Throughout the entire 2010s, that pair, if you're a trend trader, that pair was either an absolute pig or it could make you rich overnight. It just depended with the whole Shinzo Abe reign and all Abenomics and all the crazy stuff they did to just hammer that currency into the ground. And then you would just have months of nothing. It was this crazy little roller coaster. And depending on when you got into the Forex market and really started trading it, you either loved it or you absolutely hated it. But the right thing to do was just to trade it anyway, because those moves were so big that it could make your entire career. Do you remember this at all?
Absolutely. And the pair that pops into my mind is Euro Swiss franc. Euro Swiss franc is usually pretty highly correlated, so they don't move a lot until they become uncorrelated. And then they are fantastic trading pairs, but then they go back to being correlated again. So you really have to just move with the market. As the market gives you opportunity, you can't have any allegiance to one pair or the other because it's going to change, just like you saw with pound CAD.
Yeah, that's a really good one, because that for a long time didn't move at all because of the peg. I said, okay, we trade every combination of the major pairs except for this one because it has not uncorrelated yet. And then it finally did. And I'm like, okay, game on. And then it got all weird again. And people kept asking me what to do. After a while, I was like, you know what? Just let it be. Don't try to change with the winds. Just let these things be. People are really concerned about things like that because they are looking for reasons to avoid these things simply because they're just tired of taking losses when they don't move. They assign that futility to the pair itself. And I don't always think that's right. I actually think most of the time that's not right. They should just power through it.
I have a saying, and it doesn't really make a lot of sense when I first say it, but my saying is trading is trading. And what I mean by that is that in the end, every single thing that you trade is a symbol that has a bid and the ask, and the price moves from supply and demand, period. That's all trading is. Everything you trade works along that same premise. Now look, some are going to move faster than others. I use the analogy of driving a car is driving a car. Yes, it might be a steamroller that is very, very slow, or it might be an Indy 500 car. It's just how much volatility it has. Other than that, the mechanics of trading is the same regardless what you trade. It doesn't matter what the symbol is. What it matters is what's the direction, what's the supply and demand, and what's the velocity and volatility of it. Period. Trading is trading.
And I absolutely love that because when I started my material, I made it for a beginning trader. Because if you weren't a beginner, you were at least a beginner in my particular system because nobody had ever seen it before. Over time, I started getting a bit softer on the rules. I'm like, okay, I told you to do this all the time, no matter what. However, if this situation occurs, and the reason I did that is because the worst thing you can do as a newer trader or as an inexperienced trader or as a trader who's not consistently profitable just yet is to try to put a fine point on things and to try to cherry pick things and say, yeah, I'm going to trade this, but I'm not going to trade that. I'm going to trade this time frame, but I'm trade this time frame on certain days and when this session's going on. No, whatever you do, whether it is intraday or the daily chart or the weekly, whatever it is, just be stupidly consistent about it. I think that's one of the biggest takeaways here because everybody wants to try to fine-tune things by eliminating certain pairs, a certain this and that. And I just do that when you're 5 or 6 years in. Don't do it now. And most of you guys just aren't there yet.
The one example of recency bias that I want to share, which I think is the most dangerous one, is where you make a trade, the setup hits, everything looks good, you put your stop in, and it goes down or up to your stop, and it barely stops you out and then reverses the other way. And then you say, okay, I'm just going to keep plugging along. Your next trade, same thing. Barely get stopped out, would have gone your way. Third time, stopped out, would have gone your way. That fourth trade, you are going to be in so much trouble because your brain is going to be going crazy. The last 3 times you got stopped out too early and it reversed and you would have had a good trade. That fourth trade is going to be very, very difficult to do perfect. Not because of your system, not because of your backtest, not because of anything, only because of what has happened recently is going to cause you to do something different. Patrick, have you seen that one?
Yeah, and I was really trying not to be heard laughing, but I was laughing. I didn't know if the mic picked it up or not because your brain is going to be mush by that fourth trade. There's almost no way it can't. And this is good to talk about this because we really didn't talk about this during the last episode talking about slumps because this is a pretty nuanced thing. But again, it's something that happens to everybody. And yeah, you got to be ready for these too because this is going to screw with your bias. In particular, and we could even take this the other way. If you find yourself with a very disciplined system and because of impatience or frustration or whatever the case is, you become a little bit undisciplined, maybe out of those 5 or 6 things that tell you when to go, you waited for maybe only 3 or 4 of them and you just went. And that trade ended up being a great winner. Now we're talking about a whole other thing here. You just justified your undisciplined trading. Now you might even start thinking, oh, wow, this whole disciplined system I was following, the hell was I doing? I could have just done this the whole time, especially when you're new. You want that taste so bad. And if you're just not getting it, but then you finally get it over here by doing something else, it's so easy just to allow yourself to move back and forth all over the place and you never end up in one spot, which means you're never, ever going to be successful long-term because you just keep jumping from thing to thing. And I think that's a reason why a lot of people do jump from thing to thing because the first time they jumped to that thing, it rewarded them. Am I making sense here? Have you seen that?
Yeah, and then when it stops working, they abandon it. It's all
Right.
recency bias. It's all recency bias. Other examples of recency bias, things like having multiple winners in a row, that causes me trouble. That one has been my Achilles heel in my early days. Was I made the worst trades after I've had the best streaks. Revenge trading, we've all done revenge trading. You've done that one, Patrick?
Mm-hmm.
Yeah, because you have to get that one pair that took your money. You got to go get it back from that pair. This is all recency bias. We could go on and on about all the things that could happen. Whatever's happened the most recently is going to have the most effect on your current trading decisions. So let's talk about how to stop recency bias. I'm going to go back to episode 4, where we talked about behavior change. One of the things we talked about was doing a daily routine. And the whole point of the daily routine was to eliminate the baggage. When we talk about baggage, it's all of this stuff, all the stuff that you're bringing into this current trade. You need to have a daily ritual where you really think about it and flush that out. We talked about meditation, we talked about walks, we talked about a lot of things to basically just clear that baggage out. We've already kind of covered the how to get rid of it, but I really wanted to make sure everyone was self-aware, because remember, if you're not self-aware, you have no chance at all of ever changing it.
One of the ways I would always tell people, and it's not quite as eloquent as yours, it's very blunt and piggish, was to say, don't fall in love. Because everybody knows when you first fall in love, you're blissful, and anything your partner's doing that might be a red flag, you don't see, you try to look past it, and then it's going to probably get you in the end. Don't be so scorned by a currency pair that did you wrong that you just completely ignore it. Because I'm telling you, the second you do that, it's going to start treating you really well, and you weren't there for it, and you're going to lose twice. Understand that all of this ties down to emotion. And if we've told you anything, either on my channel or on this very podcast, these are things you absolutely have to avoid.
And this is really about when it comes down to the point where your system said go. Everything that you programmed or backtested says go, and you chicken out or you deviate. These are the things that can get into you. As long as you know about recency bias, you understand it, all of a sudden now you can actually combat it. For me, when I have a big winning streak, I know that I am so dangerous. I am paranoid. I am taking money out of my account and shoving it under my mattress because I know what's about to happen. Before, I did the exact opposite. I went bigger and harder, traded more because I was so on top of the world. Once I finally understood it, now I don't have that problem anymore because I do different things, because I was self-aware. So that is the point. Be self-aware of all these things you're coming into.
Agreed. Yeah, I think that's just our experience talking, because I experienced the same thing. As soon as I start winning, I almost feel worse because I'm like, oh man, this is about to end, and when it does, it's going to be bad. So let's just bank these wins while I can.
That is the healthy way to do it. The next one we want to talk about is confirmation bias, and this is where I'm going to get personal. I actually might ruffle a few feathers here, because we're now no longer talking about what happened to you. We're talking about you, who you are, and what are your core beliefs. Now, we're not going to get too deep into politics or too deep into religion or too deep into these really sensitive topics, because look, everyone can have any belief they want. If you want to be far left, far right, in the center, I don't care. If you want to be the most fervent believer, a zealot, or you want to be a total atheist, I don't care. It doesn't matter. It doesn't matter to me, but in your trading, it does matter. And who you are, when you take that into trading, all of those things you wrote on that window in front of your eyes, you're taking them in and you cannot see data correctly. So let's talk about the first one, politics. Now, I'm just going to give you one little study here, just to show you how big of a deal politics are. In December of 2020, Donald Trump was still president. Pew Research did a survey, and they went out and asked people, what is your opinion of how the president is handling the economy, and how do you think the economy is going? In December of 2020, 81% of Republicans said that the economy was doing great and was favorable. Only 39% of Democrats said the economy was favorable. Now look, if you remember, December 2020, the market was doing great. The economy was doing great. Everything was great. And yet, Democrats thought it was not so great. They thought it was bad. 3 months later, after Biden took control of the presidency, they did the same research study. Republicans were now 35% favorable of the economy. Democrats were 58% favorable of the economy. Do you want to know how much GDP changed during that period of time? Zero. Do you know how much the cost of gas went up or down during that time? I think it was about 10% was the range. Nothing changed. Not one thing changed except for people's perception. And I remember back in like 2008 to 2016, all of my Republicans were bearish and the stock market was going up. There was a great period of time for the stock market from 2009 to 2016. And I was just hammering on them like, hey, look, I know you don't feel like the country is going in the right direction, but look at this market. It's a bull market. You have to be bullish. And I swear the second that the presidency changed in 2017, all of my Republican traders, they got bullish. All of my Democrat traders got bearish. And I had to do the same thing on the other side. I couldn't believe it. Like, oh my gosh, this is the exact same thing. Nothing has changed. Obama had 2.1% GDP through his whole presidency. Trump had 2.3% up to the first quarter of 2020 before COVID started. The economies were the same. They were the same, but people's opinions were wildly different. Politics is one of the ones I see really big. Now look, not as much in the Forex market. The Forex market, I love Forex because everyone understands it's just money moving around. In stocks, options, bonds, all the other asset classes, this really can mess with people. What's your opinion on this one?
Yeah, I'm glad you said that last part at the end because I just kept thinking, I was like, how does this apply to Forex at all? Forex just does what it does. But you're right. Yeah, as somebody who runs an investment podcast, like deep down, I'm saying, well, okay, in 2017, the Democrats were probably a little bearish because Trump was tough on China. And when Biden got in, the Republicans were probably more bearish because he closed down the pipeline. So few people are even really aware of stuff like that. So I think you're exactly right. Everybody just all of a sudden stopped ignoring the data, the actual numbers that were right in front of them, and completely defaulted to their own confirmation bias. So yeah, I kind of now see how this plays in.
And another one that I suffered from. Are you an optimist or are you a pessimist? I'm a pessimist. When I started trading in 1997, I really fell in love with shorting. I love shorting, and I did really well when the dot-com bubble burst, and I just loved it. At that point on, I never wanted to buy or go long again. I only wanted to go short. That's it. And I became what is called a perma-bear. I see them bring on perma-bears all the time in CNBC. Every single time they bring a perma-bear on, the market's on the verge of failure, everything's going wrong. In the meantime, the market's ripping their face off, going higher. And then, of course, they bring the other side on, the perma-bulls, where everything is rosy, like at the top of the biggest massive bubble we've seen in years. They're still saying, buy Bitcoin at 50,000, 60,000, buy this, it's great. No, it's not great. You have to be able to look at data correctly. And if you can look at data without having those biases, then all of a sudden you're going to make a much better decision at the point of the trade. This is one where, again, I think whether you're an optimist or a pessimist is really going to determine how you look at data. If any of you have ever been married or in a long-term relationship, one of the things that blows me away is how when two people literally see and hear the exact same thing happen and come away with two totally different ideas of what just happened. Totally opposite. It blows me away. It still surprises me to this day. That's how markets work. Everyone's looking at the same data, but they have two totally different opinions sometimes. Patrick, what do you think?
I 100% agree with that. And it really kind of plays off of what we were talking about a few minutes ago with people just ignoring the data like that. The one thing I will say is that anytime I see a perma bear on CNBC, I'm really surprised because their sponsors are all financial products which rely on the market doing well. So it's not in CNBC's best interest to bring on bearish people. I do see them do it from time to time, but it's pretty few and far between. Then again, I really try not to watch CNBC or Bloomberg because they usually are such bulls. And that kind of leads me to what I was, I want to kind of ask you this question. I guess it's maybe not super helpful to most people, but maybe it will be. So let's see what happens here. I am probably known as a perma bear. I've been bearish since about 2019, maybe before that, because I was buying gold before that. So I was always said, okay, this is not making sense. I should prepare at least for what should be a pretty big crash. Now that it's finally happening, it's really gaining momentum. I seem even more bearish because I also think it's going to last for a long time. However, I have always considered myself to be an eternal optimist. The other side of this is that, hey, yeah, the world could be going to shit and it could be getting really bad for a lot of people, but we can make money off of this at best. And at the very worst, do things to protect ourselves. And I actually think that's pretty exciting because even the things we use to protect ourselves can make us money. And if we can stay afloat while the whole world crashes, once we finally do get out of this, and we will get out of this at some point, we can all end up in a really good spot. So with something like that, I don't even know where my biases are because it seems like I'm a little bit of this and a little bit of that. But I would like to know because I, again, don't want it affecting anything I do down the road, just because as traders, we know how neutral we have to stay. Am I too heavily invested into my own bias? That's a question I'm constantly asking myself.
And it's a good thing to constantly explore about yourself. After 25 years of trading, the thing I am the most proud of all the things that you need to overcome to be a professional trader, the thing I'm the most proud of is I no longer trade my opinion. At Maverick, we always talk about all these things. We talk about the Fed, we talk about gold, we talk about all these things, but in the end, we call it cocktail talk. So we always say, look, this is just cocktail talk. What that means is this is when you and your buddies are having some drinks and you're talking about whatever it is we talk about. That's all it's good for. All this cocktail talk is just for fun. When it comes to trading, none of this should be in your trading. None of it.
You literally say the cocktail talk line all the time, and it doesn't get old because it's always relevant. You're right. There's a time and a place, and when you're in front of when you're in front of your computer, that's not the time or the place.
A true trader has no bias. At Maverick, we always say that we are market agnostic. We don't care. One of my favorite lines from any trader. I've been trading with my friend Joe since 2000. And early on, him and I were arguing about a trade. And I said to Joe, I know I'm right. And Joe looked at me like I was crazy. He said, I don't care if I'm right. I just want to make some money. And I realized, holy shit. Like, I am so wrapped up with being intellectually superior. He doesn't care. He just wants to make money. And I realize I'm wrong. I'm wrong. Even though I might be right in that one trade, I'm wrong. And I had to learn how to humble myself and just say, look, I just want to make money. I just want to be on the right side of the trade. I have no more bias anymore. Just the bias of being on the right side of the trade.
You want to hear an opposite story completely? And I think this actually does tie in. I talked to somebody last time I was in the States. I remember this. I was sitting right next to somebody I didn't know, and we started talking about gold. And I said, do you hold gold? Do you trade gold? And he goes, I hate gold. I'm like, why do you hate gold? He says, every time I try and trade gold, I just get murdered every time. And in my mind, I thought the opposite of what you thought. I thought, man, this guy doesn't trade with a system. And therefore, I'm freaking elite when it comes to this because so many people don't use anything that they can default to. There's no way this guy is ever going to make consistent money trading anything. And I knew that just by what he told me, just by that one sentence. I knew that who I'm talking to right now is the majority. And I think that leads in really well to the overall solution for this. It's not going to be something completely out of left field and creative like Rob usually brings to the table. This is actually something pretty obvious. Rob, you want to kind of take us home with this?
Absolutely. It's simple, but it's not easy. It all starts with self-awareness. If you're a far left Democrat, embrace it, love it, go on your marches, do your thing. If you lean to the right, and you think that you don't trust the government and taxes should be lowered, that's great. Go do all the things with your buddies that you usually do. Go have some fun. But do not bring it into your trading, ever. You need to be aware that you are going to bring it in. And as long as you're aware, you can actually change it. And once you can change it and wipe away that baggage, all the things we talked about getting rid of baggage, then all of a sudden, you can literally trade the data, which is the charts. Period. Once you can get to that point where you literally have no bias whatsoever, you sit down, you look at a symbol, you look at the chart, you look at the support and resistance points, you enter your trade only based off of what's on the charts, you're going to be really good at trading. But it takes a while to get to that point. Self-awareness is the first step. And remember, We said this in one of the podcasts, and this is something that you should always be thinking. You don't know shit.
You don't. No, that's just it. That's why we put these systems together and test them just to see, does my system know shit? Oh, it kind of does. Okay, well, then that's what I'm going to use, because not only do I know that it can perform, I know what it's capable of. So if I can just get myself to get my results closer to that result, then the better off I'm going to be. It's really no more complicated than that. And we always say, these answers do sound relatively simple, but you and I both know it's hard to make that happen. So we do our best here.
Mike Tyson famously said, everyone's got a plan until they get punched in the face. You will get punched in the face. Can you follow the plan?
100%, because you're like, okay, I'm going to take all these biases, all these emotions out of my way. I'm going to sit down and I'm going to trade. And then something happens and then it all falls apart.
Recency bias.
So we know, yeah, it is. It's, we know it's tough, guys, but the best we can do is A, identify it, and then B, give the most reasonable solution we can. And then it is up to you to take it from there. So thank you, everybody. This has been episode 11 of the Trading Psychology Podcast. Thank you all for listening, and we shall see you next week.
Goodbye, everybody.